Welcome to Spidell's California Minute. I'm your host, Catherine Zidane. This week we're covering why a pass-through entity that made the pass-through entity tax election may want to pay the remainder of the tax by December 31st. We'll be covering the pass-through entity tax in detail at Spidell's Federal and California Tax Update. You can see a list of live webinar and in-person seminar dates, plus everything that will be covered at caltax.com. Pass-through entities that made the June 15, 2023 pass-through entity elective tax prepayment, made by November 16th for most California taxpayers due to the storm-related postponements, can accelerate the federal benefits of the tax by paying the remainder of the tax due for the 2023 tax year by December 31, 2023. Although the remainder of the pass-through entity tax is not due until the due date of the entity's return without extension, which is March 15, 2024 for calendar year entities, paying the remainder of the tax due by December 31st will allow the entity to deduct the full amount of tax paid in 2023 on its 2023 federal return. This allows the entity to pass through a lower net income amount to its owners on their federal K-1s. First, consider if the entity is eligible to make the election. To qualify to make the election for the 2023 tax year, the entity had to have paid the greater of $1,000 or 50% of the pass-through entity tax due for the 2022 tax year. If the entity paid 50% of the tax due for the 2022 tax year based on its originally filed return, the entity may not be eligible to make the election in 2023 if it subsequently files an amended 2022 return that increases the amount of the 2022 pass-through entity tax that's actually due. If the prepayment does not equal 50% of the pass-through entity tax reported on the amended return, the entity is not eligible to make the election. If that's the case, the entity should not make any additional payments in 2023 because these amounts cannot be refunded to the entity until after it files its 2023 return, showing that no election was made. The only exception to the prepayment requirement is for entities formed after June 15, 2023. These entities can still make a payment by December 31st, even if they did not make a prepayment. Also consider if the amount of the entity's 2023 income decreased or its expenses increased compared to 2022. If the net income is significantly lower than 2022, then it may not make sense to make any additional payments in 2023. On the other hand, if the entity's net income increased significantly, then the entity may want to consider making a larger December payment. And a last consideration is that if not all of the qualified taxpayer owners that consented to have the tax paid on their behalf in 2022 will consent to have the tax paid on their behalf in 2023, then the amount of the remaining tax due may be significantly less than 50% of the tax that was paid in the prior year. This would mean the entity may not need to make any additional payments for 2023, or may only need to make smaller than expected payments. Entities should not only estimate 2023 income before the end of 2023, but also confirm which owners will consent to have the tax paid on their behalf for 2023. On the other hand, if some of the qualified owners did not consent last year but may consent this year, the remaining balance due for the 2023 tax year may be larger than expected. It's important for the entity or the entity's tax professional to reach out to all potentially qualified owners now to determine who will consent to have the 2023 tax paid on their behalf, so the entity can accurately estimate the amount of the remaining tax due. We covered this topic in greater detail in the December issue of Spidell's California Tax Letter. For details on subscribing to this monthly newsletter, go to caltax.com and click Publications. That's all for this week. Join us next time for another episode of Spidell's California Minute.